Explain why it is so important that the Fed remain independent.
Because history is littered with economies that have been brought to their knees, really quite devastated, when the independence of the central bank has been compromised and politicized in precisely the way this president is trying to accomplish. One reason that happens, and by the way, Katie, when I was in the Biden administration, we were very careful to respect Fed independence. We didn't say much about the Fed. We wrote one document about the Fed, and you can find it on the internet, and it was to document precisely this point. We showed that independent central banks have a profound effect on anchoring inflation expectations, which is kind of economics Greek for saying a credible Fed holds down the rate of inflation because it blocks the president's intention in this case to keep interest rates lower than the economy would suggest, would need. And that leads to persistent, unanchored runaway inflation, terrible for economies.
Jared, just try to help me understand it in more layman's terms. So if the Fed is not independent, if the Fed is making decisions based on a president's whim, say a president that wants the rates lowered because of mortgage rates or better credit card fees structures, or somebody who wants to juice a stalling economy, why does that matter?
Well, if you have a stalling economy, you want the Fed to lower rates, but we have an economy with a growth rate that's pretty solid. In fact, it's been above trend. So I think a good way to analogize what's going on is if we want to get from place A to place B, if I want to get from Washington to New York City, I get in the car and I step on the gas. Now, I could get there more quickly if I drive 90, 100 miles an hour, but the likelihood that I'll crash or that I'll overheat and blow out the engine is awfully and dangerously high. And what we've seen consistently throughout history is when we've had that kind of ignoring of the basic economic speed limits, what you have is an economy that's just brought to their knees with devastating failure of financial markets and runaway inflation.
Gillian, it's not just the American economy that relies on the independent Fed. It's the global financial system. Explain that aspect of it.
Well, absolutely. I mean, the roots of the word credit, as in credit markets, come from the Latin credere, meaning to trust. And finance without trust, finance without faith, is worth precisely naught. And the problem is right now that the dollar is the world's reserve currency because people until now have trusted in American institutions and the independence of the Federal Reserve to basically support the value of the dollar by not letting inflation get completely out of control. If that trust, that credit in the Latin word sense, begins to crack, people will not only start to question whether they want to keep using the dollar, but you could start to see interest rates set by the markets, not by the Fed. It's important to distinguish that some rates are set by the Fed, some by the markets. Interest rates set by the markets begin to really jump up dramatically because of the fear of inflation. And that loss of trust is very pernicious. And you only need to see why if you look at an astonishing letter that was written by all the living ex-Fed presidents and many of the former advisors to both the White House and the Fed on both the Republican and Democrat side. This joint letter, which came out today, has basically said, attacking the Fed is, quote, this is how monetary policy is made in emerging markets with weak institutions with highly negative consequences for inflation. I mean, what they're basically saying, as you can see it up on the screen right now, is that this is the way that banana republics are run. And that is not good for that credit, the credibility, the credit worthiness of America in any sense. The Latin scholars have got it right.
Yeah, what does it mean for just an individual American? To say they say, I'm not in the market. I don't care what the market's doing. By the way, the markets haven't reacted today.
If you have a mortgage, that rate is partly set by what the Fed does in terms of cutting or raising rates, as President Trump says, but is also set in the markets by what investors think the rate of borrowing should be to compensate for the risks. And so if you get a market panic, then the 10-year rate jumps up, the 20, 30-year rate jumps up. And that means that if you're a borrower in America trying to refinance a house right now, you're going to face much, much higher mortgage costs and for credit cards and for auto loans. And if you're a company, you're going to face higher borrowing costs as well if you have that loss of faith.
Even if the president gets a Fed chair that lowers rates to the place he wants them lowered, so even if rates are at 3%, you still might get a 6-7% mortgage?
Here's the critical thing. What the Fed can control is what's called the short end of the borrowing curve, which means it controls overnight rates, short-term rates. The 10-year, the 20-year is set by the markets and whether or not investors have faith. And just think about it. Mortgage rates are set at the long end of the curve. And so, yes, the Fed can cut the short end. But if people lose confidence, the long end of borrowing, the 10, 20-year rate, still jumps up. And we've seen a hint of that already this year. But if you really have a crisis of confidence, that gap will increase dramatically, even if the president bullies the Fed to cut the short end of the short-term borrowing rates.
There's a legal question here, but I think it's almost secondary, so I want to keep with the politics for a moment. Laura Barron-Lopez, the Fed chair is going to be retiring next year. The end of his term will be coming next year, so Donald Trump is going to be able to replace him with somebody else. Who are the likely candidates, and have they shown a willingness to be truly independent from the President of the United States?
Well, one of the likely candidates is Kevin Hassett, the current director of the National Economic Council. And so far, no. I mean, Hassett has repeated the president's claims about Powell, has repeated that they also, the president's often criticism of Powell, saying that they want interest rates cut dramatically. And so the president himself has said over and over again that he wants someone who is going to be Fed chair, who is going to listen to him, who is going to take his advice, and who is mainly going to cut interest rates dramatically. So going back all the way to early last year, the president has repeatedly criticized Powell, has gone so far as to say that he wants him fired, has mulled firing him, has even talked about a lawsuit against Powell. Just dating back to 2 weeks ago, Katie, the president said that he was looking into a potential, quote, gross incompetence investigation and lawsuit into Powell. So this is something that he has wanted for some time, and now we're seeing the Justice Department do his bidding. And so far, there is very little indication that any of the people that could be potentially seen as possible replacements for Powell would be individuals who would be willing to stand up to the president. And we've seen that the president, time and time again, has chosen to replace people with others who will say that who are willing to do what the president wants them to do. He does not staff this second administration with anyone who pushes back on him. And that is one of the key differences between the first administration and this one, Katie.
Yeah, that is a really well taken point. This is, again, why I'm arguing that the legal part of it is almost secondary. Tom, I'm going to get to you in a moment, but I want to go back to Jared on this. Just the announcement of an investigation, just the fact that Donald Trump has gone after Jerome Powell so often, does that alone install enough or not enough confidence in whoever the replacement might be next year for this market in this country and global markets to no longer fully trust the independence of our Fed?
It certainly pushes in that direction, Katie. You know, you said something earlier, it just maybe got lost in the which was that the markets really haven't reacted that much today. And that's true, except for gold, which is kind of an insurance against this kind of craziness. But it does erode international faith in the Federal Reserve and domestic faith as well if the independence is chipped away at in precisely this way. By the way, there's an important correlate for this. Yes, in May, Trump will replace Powell as the chair, but Powell has the opportunity, should he choose to do so, to stay on the Fed board for another 2 years. And remember, the chair just gets one vote. And so the board won't necessarily go with the Trumpian chair, even if he has, you know, a puppet person in there. So that gives us a little more faith. But your basic intuition is correct. This does erode and chips away at both domestic and international confidence of the institution.
Okay, let's talk about the legal stuff because it is still important, even though it is secondary. This is a DOJ that the president has said that he doesn't know what his DOJ is doing. But this is a DOJ that has gone after the president's perceived opponents, perceived enemies, time and time again. And do you see it as a coincidence, Tom, that this DOJ is now looking into the renovation at the Fed only months after Donald Trump visited the Fed and tried to catch Jerome Powell on the spot by claiming, here it is, claiming that the cost overruns for the renovation were somehow corrupt?
I don't think it's a coincidence. Look, I think that Chair Powell had it right when he said that this is not about renovations at the Fed building. This is a case where the president is obviously very dissatisfied with Powell's decision on interest rates. He has been for a long time. He has expressed his dissatisfaction openly and explicitly and graphically. And I think this report that now they've opened a criminal investigation really is almost the predictable outcome of this. This president, President Trump, is taking a very different approach to the Justice Department than all of his predecessors did, and that he views the Justice Department as an opportunity for him to exert political leverage, including leverage over institutions that historically and traditionally have been regarded as independent under United States law. So for better or for worse, I do think this is our new normal here, where the president and the attorney general and those in the chain of command at the Justice Department are exceedingly responsive to the president's wishes, and they are willing to use their power to investigate and potentially even to indict individuals in order to achieve these larger political and policy objectives.